provide a rich platform of resources and management tools to handle your clients' administration needs, including HR solutions. That's going to be anything that's involved in HR. If it's just some simple advice that we can help them out with, but that advice leads us into a sales opportunity to talk about group benefits, then that's fantastic. There's staffing and recruiting that's involved with that as well, so we can support that there. There's 401k retirement, compliance monitoring that goes both on the business administration side, tax side, as well as the benefits side as well. Workers' compensation, other commercial lines of insurance, EPLI coverage, employee onboarding, payroll, tax services, time tracking, major medical insurance, and ancillary. All right. So again, when we think about this, think about if it's a brand new prospect and you're trying to uncover what their needs and wants are. Just focusing on medical insurance is great. That should be the initial lead in. However, if they're a little bit unsure in those areas, these are some talking points that you can bring up within your conversation to lead us into health maybe later on down the road. So you tee it up that you have the firm that you work with. We can help them for free at the beginning and assist and give advice and consult on any of these areas. And then we'll obviously convert it into a health insurance sale at that point. So group benefits, as we know, the group benefit side, it does vary based on the client's needs. There's a lot of situations out there where it may be beneficial to dissolve a group if it's in the small group category. And we're talking very small in the 5-person or less range. Sometimes it's more advantageous to go that route, especially depending on the ownership structure. And what I mean by that is a lot of times these owners, owner operators will try and set up a group policy for a few people. And a couple of those people include themselves and maybe a family member or something along those lines. It's important to remember that when you get into groups that small, there's not a lot of revenue for you, and there typically tends to be a lot more work involved in servicing those accounts and keeping those accounts active throughout the years. On top of that, there's not a huge amount of opportunities for them to get a comparable policy. So an owner operator, somebody who maybe owns an S corporation or takes what's called like a K1 type of distribution, they are not allowed to benefit from a group benefit policy. And when we think about group benefits, why that's advantageous for a company to do is the Section 125 tax benefits. As a small group specifically, they're all age banded. For the most part, there's some level funded products which we'll touch on. But that age banding is a simple average age. If they are composite rating, or else it might just be individual age banded rates. But it's an average age and zip code, and there's their rate. So the benefit that they're getting, if anything, is going to be based on the Section 125 credit that them and the employees would receive, which is basically if a premium for an insurance policy, group insurance policy, is $500 a month, they're just not being taxed on that $500 a month. That's what a Section 125 credit is. But as an owner operator, if you're equipped with this knowledge, a lot of other agents don't really realize this. They can't benefit from that if they are an S corp owner. So it has to be set up a little bit differently. They can certainly join the plans. They just have to make sure that their payroll is set up in a way to where they're not double dipping and taking that tax benefit in real time on their paychecks. Then we get into more of the large groups and the master program. So what we do as an organization, we have every conceivable option that you can possibly want or need in the group health insurance space. And having those options is obviously going to help the employers with making your clients make the right decisions on an annual basis. They're always going to have the lowest possible cost plan that exists out there, and which is obviously going to help them in reducing employee turnover, attract and retain higher talent, again, we give them an access to a wider range of both the primary health insurance as well as ancillary products. However, keep in mind, if you'd like to continue and write the ancillary products yourselves, then we're okay with all of that. This is more of a situation where we're partnering together to assist you in any area that you need. We don't necessarily need all of it. Sometimes it may make sense to go that route. Sometimes it may not, and we'll obviously talk to you about that. We have right here, we handle your client's benefits, including your major medical, and that includes the master plans, which the master program is something that's completely unique, to our type of organization. So again, we have the PEO side and we have the insurance agency side, which is technically called applied insurance advisors. The master program is not something that you can get on the open market. Again, I'll go into a little bit more detail about this and show you a coverage map here, but a master program, we're one of 5 companies in the country that have a Blue Cross and Blue Shield, a Florida master health insurance plan. We own a portion of the risk, and because of that, we get to underwrite the plans ourselves. So the full actuary team here that does the underwriting, we come up with the rating for the plan based on the risk profile of the client, and then we rate it accordingly. The great part about that is we come up with our own rates, and we're responsible for rating it wrong and obviously for rating it right. So if the benefit of that is we can see a lot more data than what any agent is legally allowed to see. Now, not everybody in an organization has access to that. It's obviously, it's isolated to a specific team that's certified to handle PHI and HIPAA type of compliance concerns. But that data gives us and arms us with the resources as we go out throughout the year. We can see how a group is performing in real time. We don't have to, put them on a plan, cross our fingers for an entire year and hope their renewal comes back well. We can see a few months into the plan if something has taken a dark turn, meaning maybe somebody got a high cost medication that's blowing up the plan, or there's a condition out there that's blowing up the plan. And we can strategize and assist the employer with making maybe mid-year moves with individuals or with the group itself to prevent giant rate increases as the year goes on. Another benefit of the master program is that we're going to administer the plan a lot cheaper than the carrier would. To give you an example, Florida Blue being one, is if we offer the same exact plans on the master program as any of the enterprise level, the large group plans that they have now, we're going to be somewhere in the neighborhood of just naturally about 16 to 20% lower than where they're at currently for the same exact coverage. The reason for that is we don't have big, towers and buildings and campuses out there and thousands of employees to worry about, cover the overhead. So we can run much skinnier on the administration of the plan than Florida Blue can or Aetna or any of our other master plan carriers. We also work with every kind of association plan out there. We've weeded through some of the ones that aren't going to last. They're operating in a way that's not really responsible. They're taking on a lot of bad risk, and the plans will end up blowing up later on down the road. The association